If you and your friend were both handed $50,000 in 2026 and we checked back on your wealth 10 years later, your friend would have built a massive fortune while you might be sitting on the verge of bankruptcy. It is not because he got lucky. He simply knew one critical piece of information that you missed and chose a completely different path from yours, even though your physical effort might have been 10 times greater. My name is James Vance, and I am here to expose the ultimate shortcut to building true wealth. Is it real estate? The traditional, safe investment that always seems to appreciate? Or is it the stock market, the frictionless, automated machine that requires almost zero manual labor? To find out, let us take a look at two investors, Ryan and Brian, who both started with $50,000 in cash and two completely different philosophies. Brian decided to take the real estate route. He used his $50,000 as a 20% down payment to secure a $250,000 rental property. By leveraging bank credit, Brian instantly controlled a massive asset right out of the gate. His tenants paid down his mortgage every single month, steadily building his home equity while providing steady rental cash flow. On top of that, he enjoyed massive tax advantages, deducting mortgage interest and property depreciation to keep his taxable income low. However, Brian quickly realized that real estate is far from passive. Over the years, he faced high closing costs, rising property taxes, home insurance spikes, unexpected repair bills like replacing leaky roofs, and periods where the home sat vacant. Worst of all, his wealth was completely locked in physical walls, giving him zero liquidity unless he decided to sell or refinance. Ryan, on the other hand, chose the stock market. He wanted zero drama, no tenant calls, and absolute freedom. Ryan placed his $50,000 directly into a broad market S&P 500 index fund and set up an automated contribution of $500 every single month. By skipping physical property, Ryan had no maintenance costs, no insurance fees, and zero property taxes. If he ever needed cash, he could sell a portion of his shares and have the money in his bank account within 24 hours. His only challenge was emotional discipline, holding through short-term market crashes without panicking and selling. When we step back and analyze the numbers after 10 years, the stock market proves to be the clear winner in pure profitability and hands-free growth. Assuming a standard 4.5% annual real estate appreciation, Brian's $250,000 house grew to roughly $388,000. After accounting for his mortgage payoff, taxes, maintenance expenses, and rental income, his net equity sits around $320,000. Meanwhile, Ryan's initial $50,000 in the stock market, growing at an average historical return of 10% annually alongside his monthly $500 contributions, surged to over $220,000 in pure, liquid cash, all achieved with literally 0 hours of physical labor. When you factor in the massive hidden costs, ongoing maintenance, and lack of liquidity in real estate, the stock market consistently generates higher net returns for every hour of effort invested. So while Brian built a solid real estate asset at the cost of his time and peace of mind, Ryan generated superior, stress-free wealth through compound interest and instant liquidity. If you had $50,000 today in 2026, which path would you take?